looking at Goldman Sachs, and I'm saying to myself, everyone's going to follow. A $40 billion share buyback, Allison, puts scope and scale on this. These people aren't Apple Computer. That's a ginormous number, isn't it?
It is a big number, and I think that relates really to the, going back to, I guess, what fueled the positive move in stocks a few months ago, this less regulation. And so, as you know, these banks were facing increasing capital requirements.
Right.
Trump coming in, people got very excited. There's going to be less regulation. Part of that is the capital return story. And we actually have seen that played out. JPMorgan, record buybacks, of course, as a percent of their market cap, not a record, but record quarterly buybacks.
Right.
JPMorgan, Wells Fargo, their buybacks like 75% more than expected almost. And now we get this big announcement. And so the two things happening at the banks, one is this regulation, less regulation. That's a structural story that is intact. Of course, we've seen the pullback because people are worried about credit risk. That really affects people more like JPMorgan, right. Wells, Bank of America. But trading is the other part of the story, like huge trading numbers, weaker banking, but huge trading numbers.
Equity revenue
saw that
up 27%.
Yep.
But
I think, Allison, I could care less about their first quarter numbers. I'm hearing from my banker buddies, nothing is happening on the street. No deal activity, no underwriting.
Right.
People are just, corporations, their clients are literally sitting on their hands waiting to see how this economy kind of develops here.
And that's because you're talking to your banker buddies and not your trading buddies, right? So what we saw in the first quarter was benefit from trading, benefit from volatility. We did see at the quarter those fees falling off and, advisory fees missing estimates, right? So equity trading, much bigger number. That's all good. That benefits from volatility. But the slowdown that we saw getting even worse now, as you can imagine, right? Clients really don't want to do anything. There's a lot of uncertainty. And, looking at what's happening with staffing. So that's what I've been saying. Look, actions speak louder than words.
Let's go there. We're going to commute across the nation. Good morning across America on Sirius XM, channel 121. Good morning, 92.9 FM. Boston, 99.1 FM. In Washington, of course, here on the flagship. In New York. On YouTube, subscribe to Bloomberg Podcast. Paul and I humbled by the growth here, given all this volatility. Paul Sweeney with Allison Williams.
What have you seen, Allison? What have the companies been saying, your bank's been saying about loan growth? Are there clients that they want capital to grow, to invest, to what are they seeing?
I mean, two sides, right? So consumers, I think there's been a little front loading of spending.
Okay.
If they had big purchases, there's a lot of people out there that are saying, I'm going to buy the car now. I'm not going to wait, et cetera, et cetera. On the commercial side of things, as I said, there's really a pause. People don't know what's going on. And, you are seeing a bit of, so that doesn't really matter for Goldman reporting today, but we did see that at Wells Fargo.
I got 30 seconds left. You're the wise one here. I'm front-running summer and even October layoffs, right-sizing, firings. Is that what we're going to enjoy in May?
I mean, sadly, we saw it already at Morgan Stanley and Goldman Sachs. Keep in mind, we also saw this a couple of years ago, right? So what they've said is, look, instead of doing the cuts later in the year, we're going to do them now. But I think that is telling in terms of their expectations. I do have to get one more number in there, $40 billion. That's 25% of their market cap. That's the buyback that Goldman just announced.
I've never heard that. Have you heard that?
That's big.
How unusual is that for a big bank?
That's big.
That's big.
Of course, we don't know the time frame. We don't know that. But hey, when the stocks are getting hit, that's something investors want to know.
Do a Sonali Basak imitation. I want the dirt on that 25% share buyback.
Nice.
25%. That's what. That's a deregulation story, right? That's not deregulation, less regulation.
Folks, I've been doing this for a long time. I've never heard that. Allison Williams, Value Add, thank you so much, with Bloomberg Intelligence.